Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Thursday, November 10th, 7:02 a.m. as I'm starting the video. And as always, please run that player at 1.5x. Futures, pretty much flatlined. We've got the big CPI print at 8:30, so I don't expect any fireworks. Aside from possibly Bitcoin doing anything pre-market ahead of that big macro print. So let's dive right into the charts. Ugly day for risk assets yesterday. The dollar held the line here at support. I mean, came right down and tagged it, got a little bounce. I would stay focused on that. TLT most likely got a little bit of a flight to safety, but still obviously in a pronounced downtrend. I still expect this to come down to retag this 92. But watch it. I mean, right here in no man's land, regardless, I don't think it's a place to really make a trade. I think you either wait for it to come down and it either makes that tag where you've got a very objective long against 92, or you wait for a breakout of the trend line and see if you can get to 97.50 and then ultimately break out for a potential tag of the 50 up here at about, it'll be down at 100 by the time it were to get there, even possibly a little bit lower. Also notice that price is below all the moving averages, pinned here below the 8-day for the last, we lost it 4 days ago. You can see here a reach up to the 8-day, another one, and then two subsequent reach up tags to the 8-day. So that 8-day, at least for now, is containing price. And notice that the 20-day is aligned with the downtrend line on TLT. VIX took a little leg up, 2%. We undercut 25 and now we're back above. So again, direction more than level means anything, especially if you're an intraday type trader. I would keep that on the board. I think the big drama obviously has been in the crypto space with the FTX exchange more or less going bankrupt. They had a tentative offer by Binance to come in and save the day. I guess they need about $8 billion in liquidity to remain an ongoing concern, and Binance has since backed out of that deal. So there doesn't seem to be any white knights coming in to save FTX. In fact, Sequoia Capital out in California, who was an investor in FTX, has come out and said they've written down all their investment and assets in FTX to zero. So no more money for them, at least as it stands now. And you can see here on the weekly chart, we had a long consolidation here. And having broken this week, you can see that we're in a void in the charts, and now certainly there's an open path to 12,500 resistance. So now 12.5 becomes your key support level on Bitcoin. Bad day for oil. I was really hopeful that this was gonna do something. I guess just reading some headlines that COVID is again running rampant in China, which feeds into the growth fears, which leads into the lockdown fears, and just an ugly day for oil. Technically speaking, we came up to this 94, got rejected. You know, you can see back in here we've beat we've beat this line to death. Not going to spend a ton of time on it, but support, little fake breakout, resistance, came up for a tag just the other day, resistance, and now swift, hard rejection from there. And now we got to look towards lower levels for support. I mean, we've got one here at roughly 85 and then 82 on the way down. So this thing's really got to see if somebody can step in there and stem the bleeding. But no other way to spin this except bearish on that rejection, and now dropping below our uptrend channel. So not looking too great there. Our GDX held the line. You probably see a bid in that for a while, at least until the crypto thing settles down a little bit. Also, this is going to be heavily linked to the dollar. I mean, we're right there at support. I think, just from a technical perspective, I mean, if you got long, stay long. You've got, wherever your entry is, I mean, from a technical standpoint, you're long against 25.5. And as long as it holds that, the bull case is intact, and you stay long and see if it can move higher. And if you get stopped out, you get stopped out. I think that's the only thing, we as technical traders can do is, go level to level. You get the buy signal, you take it long, and then you see what happens. And I can just tell you what needs to happen for a sustained bull run is, I think, the dollar breaking. Now, if you see the dollar, start racing higher, then this is probably going to come back and at least back touch, if not fail. So, I mean, that's what's on the line. NYMO, sharp move down. Again, it's never different. I told you my concerns yesterday about getting all bulled up with NYMO positioned up here. Same thing with NAMO. It wasn't as extreme, but still coming down off of overbought. Now we're down towards the middle. But the cycle remains oversold to overbought to oversold to overbought. Now coming down this way. As we move into the charts, I haven't spent a ton of time, moving all these pivots around, but the levels will be clearly apparent. I do expect movement on CPI, so we can fine-tune all that stuff tomorrow. But yesterday we lost this central pivot at 380. You can see that we were above the 50. Now, in one fell swoop, we lost the 50, the 8, and the 20 down here. So we're below all the moving averages. And now the line that comes into focus is 370. So, and you know how it goes. You lose 370, then you're back into this old trading range and targeting the midpoint here and then the lower side of the box down towards 356. So it's really imperative for SPY to hold the line at 370. And then as we move on to the 60-minute chart, you can see there was a line of importance here at 384. We got rejected from that, and then here was the 50. Got rejected, or we lost that level, came down, lost 378, right down to 374, and now we've got a little trading range between 374 and 370. So first off this morning, you lose 374, you come down to that big level at 370. And as we discussed, on the daily chart, that's a big level. You see all these prior lows back here back in June and July, where 370 was tagged multiple times, then this trading range. So then 370 becomes really important, and we've got an open gap to fill starting at 364. Moving on to the Qs, again, one of the weakest, or the weakest of the major indexes, and we've got to watch this level right here, front and center today, this more or less 261 level. If that were to break, then you got this little spike low down to 256, and we see it here on actually 255. We see some little intermediate levels. We got a large value area here that concludes right at 262, 262.50. Then we got that 260 level, and then excuse me, then 255 as the the ultimate prior low back here. IWM also bad day technically. Why? Because we not only dropped out of the uptrend channel, we lost this all-important 176 level. You can see support, bunch of rejections here, support, rejection, rejection, support, and then support has been lost. So now we're back into that old trading range that we've, again, beat to death here. So if you got short against 176 on the way down, you just stay there, right? You got your entry into the old trading range. Your first target is 173 and then 170. If price makes a recovery on CPI, you'll probably get stopped out right here, right above 176, wherever you put your stop. But technically speaking, very bearish development, because we went, we broke out and then we lost it. So the door is definitely open for lower prices here, unless and until price can come back up and recapture 176 to the upside. Meta had a nice day again on the announcement that they're laying off 11,000 people and maybe getting their house in order in terms of cost structure. I've marked in the opening gap from yesterday morning. Now we're testing that here, and you get a move lower, then probably going to come back and backfill this gap where you've got a lot of support right in here at the 97 level. So you've got 102 right here at the bottom of this big gap. If it can recapture that, then go higher. But keep in mind that 75% of a stock's movement is going to be tied to the stock market, right? And if there's a big run on risk assets, if the Qs are going down, especially sharply, it'll just be hard for Meta to swim against the tide. So that may end up being a nice little short if you get it on a fill of this gap. Apple here on the daily just shows you how important this 135 level is. That was a prior low. We came back to tag it last week and made a bounce, and now we're right back down to this 135. If you were to break that, then you've got a low down here at 130 that would be targeted. Tesla, really rough shape. Just kind of falling apart. I can go back to the daily just for a quick look. We broke this $25 trading range. We've already met the measured move and have lost this 185, which was weekly support. So the door is open for lower. I'll go back to the weekly just to show you. Big impulsive bar. Now I have 158, 160 as the next level of support down here. So unless and until Tesla can recapture that 185, the price or the path of least resistance is going to be lower, and you can kind of see impulsive move down. Not really a great bear flag, but a consolidation, then another move down. And you can just see, maybe I should have done it, but calculating the measured move, you can see just visually eyeballing it that 160, 158 seems to be in the crosshairs. Microsoft 60-minute chart. We came up to this 228 and broke out, but then promptly lost it. And once you went back below 228, then your next support level was 225, which it has found. And now you lose 225, the door is going to be opened for 220 at this prior low, and then back at 216, 214 at these lows here if 220 breaks. So today, I think 225 is your pivot level. And again, if let's just run through a scenario. CPI is reacted to negatively, and you get a big, you get a pre-market move down to, let's just pick a number, 223, 222. And then for whatever reason, it reverses. And you come back through 225, recapture from below, you've got yourself an objective long looking for 228. So that would be a bullish scenario. If it comes down here in the pre-market, unless you know how to, or unless your skill level is such that you can trade that open effectively, you would be down here in no man's land, and that makes it a dangerous trade in that you don't have an objective level to shoot against. You either got to wait for a recapture or wait for 220 to arrive to have an objective level to trade against. So I'll leave that in your hands. We'll have to see what happens, pre-market on CPI. Amazon, ugly. Our technical analysis tenants still working. We said that this break below 102.50 on the weekly was significant. Why? Because you're back in an old trading range. And we said that you had a big volume over price bar here that came in around 87.50, and it went through that like a hot knife through butter. No bounce, no support, no nothing. Came down here and lost it. And so now the door is open to come down here at the bottom of this box at around 77.50, and you could even make a case for 75 if you go down here to the last level of the higher volume over price bars here, you can see that that is a little bit lower. So, I mean, at that point, 77.5, 75, in the whole scope of things, doesn't really make a whole lot of difference. The point here is this thing is liquidating, and we've lost multiple key levels along the way. So I think at a minimum, this is going to find a level. Let's just say it's between 75 and 80. I would expect some long consolidation there. You can see the consolidation back here. Usually, once the buyers step in, there'll be a period of time, and it could be a long period of time, where this consolidates at a certain level, and then you just got to see if it holds or not. And remember, we've got a 2018 low all the way down at 65 that has not been retested. So Amazon has a ton of work in front of it. Going back to Google on a 60-minute time frame, you've got a level here at 87 that is going to be your pivot for today. We broke out. We came up to our line at 89, 90, right in there, and got rejected and coming right back down to 87. And I mean, this is the essence of technical trading, right? You go up to resistance, and it either breaks out or is rejected, and that is the essence of active trading. And so that was rejected and then back down to 87. And if 87 were to break, then of course you've got this prior low that would be open for a retest down at 83. Netflix could not hold the bottom of the bracket, and now we're back down here. So your support again is going to be in this 52.50 range, and you've got a high back here that's holding it up, but a much more significant level is going to be at 245, where you've got a rejection, a rejection, a rejection. Those would all be a line of support, and you can see those are where the high volume over price bars emerge, and there's really not a lot holding this up below 250, 250 kind of a level at these prior lows. Semis filled the gap and then came back and then lost the bottom of the gap. So I think you can be short against 195 as we discussed. The door is definitely open there for a move to 190. Should, if things get bullish on CPI or for whatever reason, you get a recapture of 195, then you've got yourself an objective long looking for 200. So I really think there's a $5 move coming in semis. Hard to tell whether it's up or down, but you've certainly got a level here at 195 that is really, really objective. Rejection, 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 support, rejection, rejection. Here it gapped over that resistance, and here it lost it. So certainly a very objective line where you've had a lot of price reactions along that 195. As we move to ARC, this is all that, that I'll just say speculative, bubble, fraud type names. And we got a decisive break yesterday. Kudos to you if you got it on this break. But now we're below this whole trading range, which can only be taken as, mega bearish. And I want to go on to the weekly charts. This is going back really to the inception of the ARC-F fund. And you can see that literally anybody that's ever bought ARC-F that still has it is underwater. And we're down here at all-time lows. Literally no support below, no technical support below. And unless and until ARC-F can recapture this 15, there's literally nothing stopping it from going lower. So one thing you could do is, if you're willing to take $1 worth of heat, right? And you wanted to make a short bet, certainly on any kind of back test that came up to 15 that failed or that hesitated, you've got a very objective entry. And even here at 14, like I say, if you're willing to take $1 worth of heat, you got all this acting as resistance now. And knowing that you're at all-time lows, you've literally got, this could go to single digits. I mean, it can go anywhere from here. As long as it doesn't come up and take your stop out, you've got a short against 15. As we move on to ARC-G, another bad day at the office. Here we do have some support, as you can see. We've got a level here at 30 that could be support, and we've got prior lows down at 27 that would be your next level to shoot against should 30 break here on ARC-G. And I just wanted to continue to show you these weekly charts. We had lows back here in the 23 type range. We had these lows right here at 27.5 as we just discussed. So there is some support down here, but I would imagine if the ARC complex is getting hit, that these levels, will be found. Same kind of setup with ARC-K. All these levels of support failed yesterday, and we lost 34. Looking at the weekly chart, we are really basically almost off the chart here. But you can see COVID low right here and 2018 low right here. So we're at the at all the prior lows. So let me just do something here. Let me see where ARC-K was created. Oh, it's way down here. So you lose the COVID low, you lose the 2018 low, then you got a lot of downside, down into the to the 20s and even the teens, where this thing originally started back in wherever it did, 2016 or whatever. So you can see how important this line was across. So keep that in mind on ARC K. ARC W lost his prior low yesterday. If you're short, if you got short at 42 or right in there, I'd stay short. Going on to the weekly chart, I'll do the same thing. See if we can go back and see where this thing was created. Yeah, you've got whoops. So we're right at the COVID low, the 2018 low, and this level back here. I mean, you get another bad day, or tomorrow on the weekly close, you drop below today's close, you're going to open up a lot of downside here where there's not a ton of support. I mean, the next bar comes in at roughly 30. So there's still more downside to go on ARC W if it can't hold the line here. I'm going to wrap it up there. If you get stopped out on energy or refiners on this rug pull, just respect your stops. I mean, do that on anything. That way you won't get hurt. So you can be disappointed about, a trade or a couple of trades, but don't wish and hope. If the charts are breaking down, recalibrate. Don't just sit there and say, oh, it's going to come back, it's going to bounce, it's going to do this, it's going to do that. You can always get back in if things turn around. Just trade your levels, respect your levels, and respect your stops. And that way you certainly won't get hurt. And remember, the first rule of trading is don't lose money, right? And if you lose money, keep it at a minimum. The only way you can get truly, truly hurt is staying in trades way too long and trying to prove that you're right. Just accept the loss, move on, recalibrate, and if you're not sure what to do, don't do anything. So let's wrap it up there. Let's see what CPI has to say, and we will take it from there. If you're new to the channel and you appreciate technical analysis, hit the subscribe button, the alarm bell, jump over in the show notes, find the link to the blog site where you can drop in your email address and get all my content delivered directly to your inbox. That way you won't have to hunt for it. So let's see what CPI has in store, and we'll take it from there. This has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you next time.